Welcome to TradeTheMBI.com. This is John. This report is for the 22nd of April. Well, we had a brief pullback to the 27.35 range, slightly below it. Popped right back up at this particular point so far, but that's kind of caught between the 50 and the previous algo level here. Still, no matter how you look at it, it's just incredibly impressive that you can see that we're at the 2700 mid-range, and you have just a staggering number of companies saying that they're completely broke, need government assistance, relatively zero functioning economies in most states. Even the talk about reopening is going to be so disproportionate because of the unevenness between how states are going to approach it. It's going to be completely dysfunctional, and earnings are going to start. I mean, places like Netflix doing just fine for now. As they run out of content, people get bored with it, and that's going to be an interesting one for them. And I think that they see that eventuality coming on the horizon, especially since they have no new productions. So at a certain point, some of these other companies, I don't know what you do with an airline, you don't know what you do with hotels. They may get bailout money, but for what? For how long? I mean, you can already see Richard Branson, Virgin, struggling to raise capital to stay afloat. These are all the touted billionaires that could be on the wrong side of things. In this particular case, we have falling steel, falling red, a flatlining from a green, so midterm to long-term buyers is still relatively bearish, but you have to just be impressed with the ability to hold right at these previous algo lines. Are not necessarily related to Fibonacci lines either, which is interesting enough, and not, because we kind of expect that. With complete fall off of shakeout, we now move negative, but with gold still rising, along with Azure, and that they're finally meeting, it's still been a preponderance of an amazing feat to keep the market at these levels. So the short signal came in with the DOC spread on the magenta candle there. We ended up with the cross of the steel right after, and that has led to, well, basic support off of the ABM lines. This has been a much more dramatic DOC spread than we're seeing on the S&P. And, when you have the Fed out there buying as much as $40 billion, depending on who you listen to a day, in assets in variety of forms, there's no wonder. I mean, it's an amazing thing when you have a complete EU that's generally not functioning either, and you're still holding up that well on a euro to dollar basis. Shocking. Did all these European countries buy oil when it was in negative, value? Probably not, because they don't have any money. You would think that every country in the world would want to be sucking up some degree of supply to put into storage, which would be enough to overwhelm the excess, but clearly not. And clearly the rebellion against further production cuts from people, I mean, you get reaching a point where you're just basically making, drilling oil to give money to other people, which, I mean, isn't that a fabulous story? It's been a little strange. I don't know why some of the people who are looking for new Green Deal stuff and that are excited, because with this low of energy costs, you're that much further away from these alternative energy sources, because who's going to want to pay those exorbitant sums when you're getting oil for free? I guess they hadn't thought that one through. Though we can all see the effects of zero pollution, it's an interesting thing. It's nice to have. Not that it was ever bad here in Florence, but certainly with the wildlife that we see in areas where tourism kind of drives them away. They've kind of like reclaimed the cities as wild areas. Gold, coming off of that little dip down, we got a little DSC spread going there, but it's a full steel reset. It's going to move back up. I mean, they've been artificially keeping the lid on it, but there's certainly some pent-up demand from an intraday standpoint, I mean, it was pretty clean. I mean, we ended up with like the early start, and then you had like this blue candle that came in, but immediately we could see the weakness build in there. We got our power mode 2 signals along with the DOCs, where you had the crossover already broken down with that, and it's like, okay, boom. And these are adjustments that I've been working with on trying to convert the DOCON paint under these certain colors. I'm in the process of doing those languages where it will flip over and say, okay, yeah, we were looking for the run, it didn't quite happen, okay, move on, we'll turn around and go in the direction of the signal. We're able to do that because it's not hard to see it. Teaching the computer to do something exactly when you want it to under all conditions isn't always the simplest thing, but we're making progress. Further along, we ended up with more short signals, and then when you get like this one where it was just, you had double short setups within a short span, it's like, okay, you got boom short 1, boom short 2, and usually that second one gonna have a little bit more oomph to it, and in this case it did. And even when we ended up with the yellow candle, I wasn't all that excited because you already had it marked it down here. Positive extreme, as well as near positive extreme with the yellow, right as you're getting a buy signal and you're below 23%. All right, so you know that one's going to take some more work to smooth out. And it finally does it. Starting to look like it was going to break out here when we had the big Sigma events. Which meant it was probably going to be a little early because they don't usually show up right at the beginning of a move. It's usually a little bit after that. So, of course, the dip right back down to the lows, and then that spawned the early move. Got it back, portion of it, then it kind of went back and forth in between. And this is exactly what I was talking about, how it would play out, because what they'll do is they pick the support line. Ideally, it's close to one that we already have marked prior from a positive extreme or a negative extreme where we dip below the negative 60. And then they just kind of like buy up the supply, and then people are forced to just trade above it. And that's kind of what you get with these pops. And I mean, you're sort of seeing the same effect now because you're just back up the same dip as before. And that's how they do it. You get the light volume, you can do it. That clears any short stops that you had from up above. People thinking, okay, I can, hide from them by being a little bit up. It's like, no, you really can't. And then once they do that, it just comes right back down, and they've taken care of all the people who then thought they could buy up into that, and they got wiped out too. So it hammers both sides. That's the idea. That's what the market is for. It's always been intended to be that. Now, the base level, this is just wherever there's the large pool of money that can support price at a particular level. And we've been seeing that they keep pushing that up a little bit at a time. We started right here. Once we get to the 25s, they did it again at 26.35 here, and then this 27.35 seems to be the point, which is pretty close to the 50% Fibonacci retrace level. How sustainable is it? It's going to be real interesting as these numbers start coming out for earnings, because when you're talking about companies that are just decimated, it's going to be tough for anyone to be saying, oh yeah, real good prospects, buy rating. Regardless, all we can do is play the signals, and if the arbitrary action of the Fed is going to continue to impact things, we see it and we just have to go with it. There's no sense in arguing with the Fed, because that unlimited pocket, no chance in beating it. As always, though, I will continue to put up charts on the Skype chat. Trade well. Talk to you later.